Happy Monday. The foreign exchange market has seen the dollar move to the downside and then back to the upside, and trading here today as the U.S. traders enter. I'm going to go through the technicals that are driving the three major currency pairs: the euro versus U.S. dollar, dollar versus yen, sterling versus U.S. dollar, from a technical perspective in this video. So let's get started. The U.S. stock futures are implying a higher opening. The U.S. Bond market is showing higher yields this morning. And as I mentioned, there's been lots of volatility in the foreign exchange market. Geopolitical news will be a focus this week. Also, US PCE data will be released on Tuesday. NVIDIA earnings will also be released this week, along with German or CPI data for Germany and France. Consumer confidence with the coming on the back of the Michigan Consumer Confidence survey last week, which showed a sharp decline, will be released to get a different view of that measure. And we also have a preliminary US GDP, along with other things going on in Washington and geopolitically. So let's take a look at the euro versus US dollar to kickstart the trading day today. And if you take a look at the hourly chart, we did move sharply higher in the early European session, extending above the high price that we saw in trading last week, I guess, not the week before. Looks like the Friday before. But we fell short of the high price for 2025 and started its rotation back to the downside, and down goes Fraser as she goes. We came right back to the swing area here, which was defined by a number of different swing highs and swing lows, going back in time to this period here, here. Here. You get the idea, and you can see it, which gives you a nice little visual of this area. We also held right at the 100-hour moving average so far. That level comes in at 1.04595. So the swing area, I guess, a 200-hour moving average is at the low of the swing area at 1.0452 area. So 5.2 up to 6.7 is our support area, and so far we're holding that, but this is just because we've just moved down toward that level. We're trading right near the lows for the day, so be aware of that. If we break below the 100 and 200, it would open the door for further selling momentum to the downside. That could see the price head on down to, let's fix this Fibonacci, move it up to this high right here. 38.2% retracement comes down at 1.04059. That ultimately would be a target area. Roughly corresponds with the 1.0405 level, which for those people who haven't been listening, is the 50% midpoint of the move up from the 2022 low to the 2023 high. 50% comes in at 1.0405. Going back to our hourly chart, that 1.0405 is now also equal to the 38.2% retracement of the move up from the February low to the February high. So dual levels right there. That would be another key target on the downside to get to and through if the sellers are to take more control. But first things first, we need to get below the 100 and 200-hour moving average to increase the bearish bias. Alternatively, we can see traders lean against the swing area. Why not? Risk can be defined and limited against it. If it does hold against that level, then a rotation back toward the highs is not out of the question. We've seen it happen once today. We could see it happen again. But we're going to need that kickstart from something that would imply a lower U.S. dollar, higher euro versus U.S. dollar. Let's take a look at the dollar versus yen next. And let me take a look at the daily chart first, because on the daily chart on Friday, we fell below the 50% midpoint of the move up from the September 2024 low to the high of the price that we had in 2025. That 50% midpoint comes in at 149.221. Also, this swing area right through here, going back in time to these days right through here, found fell below that level as well. But we fell short of this low right here, going back to December, and we moved and closed within that swing area on Friday. Trading here today, we made another move to the downside, but again, rotated back to the upside fairly quickly. You can see that. I'll go to the hourly chart here for the dollar versus yen. The low price fell in the early Asian session down and extended the low or it's extended through the low from Friday's trade, but only by a little bit before rotating back to the upside. We moved above this swing area, which if I go to the 4-hour chart, you can see its development going back in time. Let's spread it out even more. It's this yellow area right through here. It goes back to different levels. Actually, it goes back even further to this high right here, this high right here. This formed the ceiling. Then it became a floor before moving to the upside. We did fall below the floor right through here, but then reestablished support right here before moving to the upside. Increasing that level is important going forward. So, and that's what that defines this swing area. You can see that in last week's trading, we came down to that level, found support buyers, and in trading. But on Friday, we fell below that level and trade here. Today, moved back up. So 149.07 to 149.39 is a key level to get back above them. We did that, and now this level is going to be support again if after they fail break to the downside. So watch that level in trading here today. If we do move back below that level, it'll be more bearish. If we find support buyers against that level, then we could see further upside corrective action in the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. We talked about this price last week, trading above and below the 100-day moving average. Buyers had a shot, buyers had the shot, buyers had the shot above that level. We closed up below that level, but then in trading here today, we saw rotated back to the upside, got back above it again. So buyers haven't had their shot. And what they do, they missed again. What's wrong with you, buyers? You had the shot to take the price higher above the 100-day moving average, and you missed. And we start back down below that level. This area right through here between 1.2596 and 1.26147 is going to be support. And inclusive within that area is the broken 38.2% retracement and move down from the September high to the low price that we saw in 2025. That 38.2 comes in at 1.2607. Get below that level, get below the 1.2596, opens the door for further downside momentum for this pair with the, perhaps on the swing area in the 100 bar moving average of the 4-hour chart being a magnet for the downside for this pair. Alternatively, find support against this level, and we could see a rotation back to the upside. And we'll see if the buyers can take control, but how many times are we going to move above the 100-day moving average and fail? I don't know, but buyers had a shot again today. They missed. So there you have it. A look at the three of the major currency pairs, Kickstart trading day and the new trading week. My name is Greg McCloskey. Good fortune to trading. Bye-bye now.